The dollar has strengthened against Asian currencies, driven by expectations for U.S. inflation data this week, as well as readings showing China's worsening deflation. China's consumer price index fell 0.5% year-on-year in November, more than an expected 0.1% drop, seeing its fastest slide since November of 2020. The producer price index also fell 3% year-on-year, marking the 14th straight month of PPI decline. The data moved China's stock markets, with the CSI index recovering 0 to 59% after falling more than 1%, while Hong Kong's Hang Seng index fell by 1.8%. For more on this, we are joined by Tim Watterer. He is a chief market analyst at KCM Trade. Thank you for being with us on the program. Now, given the recent data indicating falling producer and consumer price indices, what can we say is driving China's deflation in these departments?
Hello, nice to be with you. Well, that's right. China facing the opposite problem to many economies around the world, namely deflation rather than inflation. I think it really all boils down to a lack of consumer confidence. Now, whether that's due to the troubles in the property market in China or the rising youth unemployment, it seems there's a real reluctance to spend, and that's feeding through into these softer consumer prices that we're seeing. And on the producer price side, we saw last month there was a drop-off in energy prices, so that definitely did impact the drop-off in the PPI that we saw. But overall, I think it does, point towards, that lack of consumer confidence in the market at the moment. So, and that was borne out a little bit by the trade balance figures last week, where China's exports were up, but imports were down. So that really reflects that softening domestic demand picture that we're seeing in China.
So with the U.S. dollar coming in stronger today against Asian currencies and analysts expecting inflation in the U.S. to ease, what do we expect the Fed to do in their next meeting this week?
Well, that's right. All eyes on the Fed this week. I mean, most expectations are that we won't see any interest rate action this week. More so, the focus will be on the language or the tone struck by the Federal Reserve. That's because we saw quite a strong jobs number in the US last week. And in fact, 19 of the last 23 non-farm payrolls reports have been beaten expectations to the upside. So that hints at the inherent strength of the labour market, which is a source of inflation. So I think what we'll see is the Fed try and walk that, fine line between managing market expectations, which are currently a little bit optimistic in terms of hoping for cuts in Q1 next year, but also, I guess, convincing the market that, okay, yes, the economy is quite strong, but, the battle against inflation is not over. As we know, inflation is very non-linear in nature. And of course, the other thing to remember is, ahead of that FOMC meeting, we have the latest US CPI figures. So that, I think the result of that will also influence whether we see a hawkish or a dovish tone from the Fed this week. But I think either way, they'll be wanting to keep their options open and maybe push back a little bit on current market expectations for rate cuts as early as Q1 next year.
Chief Market Analyst at KCM Trade, Tim Watterer, thank you so much for being with us here on the News Hour.
Thank you.
Now to other top stories from around the world. Turkey's unemployment rate has declined to 8.5% in October, hitting the lowest level in more than a decade. The number of unemployed people aged 15 and over decreased by 163,000 compared with the previous month. Meanwhile, the country's current account balance posted a surplus of $186 million in the same month on the back of a narrowing trade deficit. Japanese Premier Fumio Kishida has pledged to take steps to restore trust in his government following reports that he's planning to reshuffle cabinet over a series of fundraising scandals. According to local media outlets, Kishida will replace as many as 15 ministers and junior ministers. The officials in question belong to the Liberal Democratic Party, faction previously headed by former Prime Minister Shinzo Abe. And TikTok has agreed to invest $1.5 billion in a joint venture with Indonesia's GoTo Group. Under the deal, the Chinese video app will acquire a 75% stake in GoTo's e-commerce unit, Tokopedia, as it looks to restart its shopping app in Southeast Asia's biggest economy. In October, Indonesia banned online shopping on social media platforms to protect smaller merchants.